It has been a great week for markets, with the Nifty up about 3.5%, the Nifty Bank about 4%, and the small cap index up 6.5%. The big question many are wondering is if this is a bear market rally and they can be powerful when they come, or have we really for sure seen the worst of the downside levels? The other question, of course, is if you believe the time is to be constructive, is what to buy. Financials is one consensus overweight, but what else? Lots of stuff moving around. Surabhi and I'll discuss all of this in this special conversation with Gautam Chhaochharia, Head of Global Markets, UBS Securities, and Vishal Goyal, Head of India Research and Banks Analyst at UBS Securities. Gautam and Vishal, great to have both of you gentlemen here with us on the program. Appreciate your time as always. Prashant, this side. Gautam, as I prefaced this conversation with that comment about is the bottom in, not in, a bear market rally. So let's just get that out of the way, because I think that is the number one question in the minds of, I guess, most who are watching this broadcast.
Sure. Thanks, Prashant, for having us here. Well, look, from a tactical near-term perspective, it looks like the bottom has been made very clearly. And that's what our view would be from a market's perspective. And the reason for that is very simple. What was driving the market correction over the last few months was valuations and the slowdown which we saw in macro growth and earnings in India. Both of them, after the correction and after the last couple of months, I think has reversed. One, valuations are no longer as absolute and relative basis as expensive as they were. Secondly, the growth slowdown which we saw, the policy actions, both from the central bank and the government of India in the last couple of months, have clearly reversed the direction. So with that in context, market definitely seems to have bottomed out. However, I'll just add a caveat. We will live in uncertain times. Obviously, what happens to global tariffs, global growth specifically, not just in India, that will have an impact on Indian markets going ahead, but that's kind of well known. But market definitely has bottomed down.
You threw in the word tactically. So it's like the caveat there. But you think tariffs are the big one? That is the big one. So on the second. And so let's just get that out of the way as well. Do you think it's going to be a big one? It's going to be something to be... So they'll go max high tariffs. I mean, they've said they'll hand over a number to each country. And India has been mentioned many times as a high tariff country. So they'll hand over a number on the 2nd of April in terms of what's the cost of doing business with each country. And the expectation is then they will back down from that level. So it could be a high number to begin with, and then perhaps negotiations, etc. What's your sense? And how much of a risk is that for the broader market, Vishal? Sorry, that's for Gautam. Sorry.
Sure. Okay, look, for tariffs, we are less worried about how it impacts India directly in terms of what US tariffs are for India, because it's out in the media that they're talking in terms of a bilateral trade deal. So even if there's a tariff which is a shock on early April, it's quite likely that it followed a trade deal and we have a much more equilibrium state, which actually not necessarily bad for India in a bilateral sense. What we do worry about from a tariffs perspective is not the direct impact, but the indirect impact. If the tariffs in general leads to a global growth slowdown, it will affect Indian markets and Indian economy. So that's a much bigger worry for us rather than just the tariff rate which US imposes on India on 2nd April.
Yeah, absolutely. And I think that clarity will only emerge as the next couple of weeks unfold, right? Because on 2nd of April, we'll get a number, like the US president has indicated, a number which will be the basis and the starting point of negotiation, and then we'll see how that goes. So it's not quite over as yet. Gentlemen, great to be speaking with you this morning. Thanks for joining in. Vishal, I wanted to get to you. So the big headline from Gautam has come in, that the bottom has been made. Now let's talk some numbers as well. And he alluded to how the actions from the central bank as well as the government, how they've kind of reversed the cycle to an extent. What does that mean for anticipated earnings recovery in FY26 and how our valuations look?
Right. So I guess we are seeing earnings downgrade cycle for almost a year now for financials, and we've been cautious in general because we were expecting credit quality driven earnings downgrade, which are still happening. Incrementally also, our earning estimates are lower than the consensus, mainly because we feel a bit of credit cost is still to come, versus growth expectations also clearly in consensus numbers are slightly more benign. If you look at the earnings downgrade cycle, if the measures taken by the government and RBI starts, showing results in the first half of, next financials, we might see some upside in earnings trajectory. Otherwise, if you look at the construct of P&L for banks especially, you would see that with the repo cut, you will have margin declines, which would put pressure on PPOP. And therefore, if you look at the consensus earnings even today, which are higher than our estimates, they are still in single digits for most players. So that is what I think is in the numbers. In terms of valuations, yes, because the sector has been derating for quite some time, the valuations look reasonable, and we need to see whether FY27 can be a recovery year. I don't think FY26 first half may not be, second half potentially. Yeah.
So, Vishal, let's get some of the numbers in. We're going to be ending FY25. I think the guess is anywhere between, 5 to 7%. It's been a bleak year. What do your numbers look like for FY26? Like you're saying, maybe the recovery is more back-ended. And then FY27, at least at the Nifty level, do we get back to double digits earnings growth?
I think that's for Gautam.
So,
Gautam, Gautam, why don't you take that?
I'll jump in. I think double-digit earnings growth for Nifty overall and markets overall in FY26, specifically given off a low base in FY25, should be a very reasonable expectation. And we do expect that to happen, including for the next couple of years. And as I said, look, the macro cycle itself, FY25 was a macro tightening cycle. FY26 is a macro easing cycle, both from RBI as well as central government. So that should be enough to have double-digit Nifty earnings growth.
Got that. Vishal, on banks and financials, I mean, actually it's been largely pretty tough, right? Accidents in banks, I mean, IndusInd is a case in point. MFIs has had a tough few quarters. NBFCs in many cases, I mean, has not really made a lot of money except maybe a few. Gold finances perhaps is an exception. So largely a tough environment. Even though the view has been that it's a defensive space, valuations have been reasonable, and this has been true for the last, I think, almost at least 3-4 quarters now. Do you think money will be made here? And what are your top ideas in this space, Vishal?
Sure. So I think, as I was alluding to, that the earnings downgrade cycle, it's been there for last almost 4 quarters. We could be probably towards the end of earnings downgrade cycle, but I think little too early to preempt, because RBI announced a few things, the tax break, all these things generally should be positive. But on the ground, the data we see, it's not showing full recovery. Even if you look at today, the credit growth, loan, the deposit growth numbers are still, 10-11%. Liquidity is extremely tight, probably also because of advance, taxes. But we need to have easy liquidity once again and recovery on the ground. The data we track on delinquencies, overdues, that also says that stress is not over yet. And therefore, I think it's worth watching the space for the time being. In terms of the sub-segments we like large private sector banks. We continue to like them. We feel that the sustainable earnings growth of 14-15%.
But my question is, do you like them on an absolute basis, thumping the table and say, well, buy them? Or this is like you make a nice portfolio and you put some banks there. Nothing wrong with it, but is it an absolute call, absolute return call?
See, thumping the table, valuations are not come yet, and therefore it is a relative call.
Got it. Fair enough.
Even financials, I'm actually, if I could jump in, I'm a little surprised because large banks specifically, Vishal, they've been underperforming throughout the last phase of the bull market. But you still think that thumping the table valuations on large India financials have not yet happened?
See, I think maybe the definitions are different for thumping the table.
Maybe
but let me clarify. let me clarify. So a 15% to 18% return is still doable because they are generating good ROA and ROE. I would say 25-30% is a thumping the table, kind of valuation or upside. So
No, absolutely. Point taken. We've got so much to discuss, so let's move the conversation along. Gautam, another sort of constant feature in this market has been more and more competition in wherever there is profits to be made, right? I mean, profit pools getting disrupted, at least in the future. Cables and wires, for example, right? A news story, two hits back-to-back, announcements from large conglomerates making an entry, large business groups making an entry. What's the view there, and what's the feedback that you're picking up? Any outright buys after the sell-off?
Look, any sector where competition increases does cause concern, both stocks as well as incumbents. But there are two things to look out for when we look at the framework for these scenarios. One is the level of unorganized sector versus the organized. So if a new player is entering, it's more likely to disrupt the unorganized or also organized in a material way. That's the first framework. And the second framework is the time scale. How easy to disrupt in the next 3 years versus will it take 10 years? Like the role of distribution, the role of understanding the network, everything. Okay. So if you look at cables and wires specifically, we do see some impact. But again, after the correction, the sector overall does look attractive risk reward for us from our analyst perspective. That's the framework we'll put it.
Okay, so that's cables and wires, and you're still keeping the faith despite all the, the worries about competition. Gautam, another space, and I want to get your thoughts overall on PSUs and then defense. And the question really is whether the old leaders can continue to have a place in this leg of the bull market, if you're saying the bottom is in place, and if we are in one. Because I remember you folks came out with a call on HAL, and I think the view on that specific call was that the market's concerns are maybe a bit misplaced and orders will still coming in. So what's the wider view on defense and PSUs?
So before I get into defense and PSU, one simple market level point I would overlay in that discussion is I think 2025, as the market has bottomed and recovers, will be very different versus what we saw last couple of years, where thematics and sector-driven big moves happened. This year will be, even within sectors, a lot of differentiation for stocks. Like you heard from Vishal, financials also is not just one simple basket. There are pockets which will do well, pockets which still are seeing stress and will take time. Same thing applies on PSUs and defense. So we don't have PSU basket as such, but all the relevant PSUs sectors. So it won't be a thematic run for PSUs and defense. But within that, and it applies to even CapEx or consumption, we see specific stocks which are attractively valued now on a relative basis versus where they were a year back, or even versus where they were pre-COVID, and where we have strong visibility on catalyst and growth, not just for the next 6-12 months, but for the next 3-5 years. So wherever we have that visibility and comfort, then yes. But the broader sector thematic, that strategy will not work in 25, unlike last 2-3 years.
But you are seeing some of those opportunities in defense.
Absolutely.
And where else in PSUs? Like defense, some defense names meet your criteria. Where else in PSUs do you still see valuations, growth, etc.?
So more than valuation, growth specifically across, there's opportunities in the utility space, defense, even financials, a little bit here and there, like segments of financials which are catering to particular sectors in the non-bank PSU space. Again, there are opportunities, absolutely.
I think in your published notes, HAL comes up as an idea, right? And I think oil marketing is another pack.
I can't comment on individual names, but yeah, oil marketing in general looks interesting, specifically given where the crude outlook also is.
Yeah, no, absolutely. I just want to make one point, Gautam, and Vishal said that he's still not seeing when banks are essentially front-facing or economy-facing, right? So it gives you a real good picture of what's happening. And this ties into the earnings growth point that he made. He said, well, credit growth is pretty sluggish, still very sluggish. Maybe it'll pick up as some of the RBI measures start to work their way through the system. Is that the view, Gautam, the team, that it will happen? I mean, it's a H2 story in that sense.
It will happen again. And then you look at global economies or Indian economy historically, credit growth doesn't drive or lead a recovery. Credit growth typically follows with a lag. there is activity picks up, and with the activity pickup, there is demand for more credit, and that's how credit picks up, not the other way around. The conditions for the demand and credit pickup has to be there. The condition for demand is the broader economic pickup, and for that to be supported by credit growth, there has to be sufficient liquidity in the system.
Well, that's very interesting, but we will continue this conversation. We have to take a quick commercial break here, so stay right here with us as we talk to the top team at UBS Securities India. Lots of sectoral views coming up in just a bit. Welcome back. We are in conversation with the top research team at UBS Securities India, Gautam Chhaochharia and Vishal Goyal. Gentlemen, thanks very much for being with us here today. Let's talk about a few other spaces. IT services, Gautam. Again, I mean, we all know the news flow and headwinds, etc., which are well advertised. But what's the view now? The team at the UBS and the analysts at UBS. What are some of the ideas where you have comfort and one can make money? Go on.
Yeah, so again, that's a space where the overall macro is quite double-edged, if I use the word. There are elements which can surprise positively if the US growth picks up and spending picks up. But given where the valuations, etc., you have to be very, very selective. So we won't go out and say, okay, you overweight IT and go out in a big way, but also not so it's more of a neutralish call on the sector overall. But there are pockets, again, just like most sectors, where we have interesting buy ideas.
Vishal, I just want to circle back to financials for a bit, and we take your cautious approach on board. So really, you said you still like some of the large banks. Beyond that, let's talk about diversified financials. And there's so much going on. Look at the insurance space. There's almost a deal a day over there right now. And there's too much of regulatory change. There's the entire capital market space where prices have come off significantly. So do you see opportunities there? Let's take these two pockets first, insurance and capital markets.
Yeah, see, so on both this, especially capital markets first. Now, we have seen blockbuster years, right? Last 2 years. In terms of activity, in terms of revenue, EPS. So we are probably, seeing like I don't want to say best is behind, but it's almost like, there was a great momentum for capital markets player. In the very near term, maybe it just consolidates or slows down. We are structurally positive on capital markets, like exchanges and other ancillary, players in capital market, which we cover. So we think there is a great structural opportunity in this place. It's just that one needs to be sure about the near-term slowdown or consolidation, which we are already seeing, right, in some sense.
That's capital markets. What about insurance? And what do these recent deals imply for overall interest and valuations in that space?
I think that space is also consolidating in terms of growth, right? And therefore, we have seen the consolidation in valuation. We don't have very strong, bull or bear view there on insurance. We feel that, it's a sector which, again, especially the under-penetration of protection will keep driving growth over there. And savings is the bit which keeps, the volumes moving. Yeah.
So let me ask you a more general question on NBFCs. Now, the fact that there is better liquidity, slightly easier norms, risk weights have been lowered, that's good overall for the NBFC space. But if I were to ask you to rank NBFCs in order of preference or priority, where one can expect better returns, how would you rank it? Let's say there are the housing finance companies, there are auto financiers. You could talk about the gold financiers. Again, they're a big deal coming in, private equity major coming in and thumping the table with some money. So tell us, NBFCs, what to pick and why are you convinced?
Sure. So let me give you the framework, about how we are thinking about NBFCs. First, like microfinance, we feel there are still pressures. Asset quality, headwinds are still there, especially given that few things are still, pending to be effectuated on the ground. Let's say the 3-lender norm. Plus, I'm assuming the situation in Karnataka, is still work in progress in our view. So microfinance currently, I think should be the bottom, in that table. Then I think if you think about consumption lending, which is unsecured lending or NBFCs who are catering to those. There also we feel that there is still data is still suggesting build up on the stress, in the sense it's not falling, like it's not improving anymore, not improving. It is staying where it was after increasing in terms of delinquencies. So that's also a segment there. We need to actually watch out for data. Then I think if we think about auto financials, I think auto financials is space we like. Again, selectively names depending on the valuations, but that is a space where at least you don't have so much problems as a microfinance or unsecured. It's slightly better place, and because they have fixed rate lending, they benefit the most from falling rates. So that is like one of the segment. We don't cover gold finance as of now.
Okay, got that. Just a couple of other sectors, and we'll round up the conversation. Gautam, on Telecom, what's the view? We reported yesterday that the government help, which many were hoping for in terms of the AGR dues after the court said no, perhaps won't come. Does your view change, and what's the house view?
We haven't changed any view or our stock preferences. I think the industry looks still attractive overall, though we don't have buys across the sector. We have a mixed bag of recommendations across the sector, including telecom towers and telecom service providers. So it's a mixed view, but overall, the sector still looks attractive to us.
Okay. Gautam, if you can tell us what's the feedback from the global team at UBS, right? Because they'll be tracking all those tariffs, etc., much more closely than we are here. Is it going to be, will 2nd of April be a meaningful jolt to global growth? Because that is the channel through which India will get hurt, as you said, not directly.
So look, not just for India, even global equities is not priced in if it leads to slower global growth. So firstly, the impact of global tariff or these tariffs on global growth and the impact on markets, I think globally is not priced in. That's our house view. Will it lead? What kind of tariffs will it happen on 2nd April is anyone's guess. How long they last, and therefore the impact on global growth and recession, again, too early for us to comment. But if there are meaningful tariffs which continue for a prolonged period, it will definitely lead to a growth negative surprise globally. And
but does the team at UBS globally believe that it's an ideological issue? They're ready for some short-term pain. So, are they leaning towards that view? Or is the view that, well, they can't see the market sell off too much, so they'll reverse and they'll go pro-cyclical once again?
Even that is too premature, right? Because there's a second order effect, which is how do different economies and countries respond to those tariffs? So one is it's difficult to predict what US President does on 2nd April, both in terms of degree and quantum. Second is how do different economies and countries respond? Like if there's a big tariff on India on 2nd April, will India wait for the trade deal to be signed and do nothing? Or will India impose tariffs in retaliation immediately and continue the trade deal discussion? Will have very different implications. If that we extrapolate globally, it makes it even more messy than it is.
So to sum it all up, I want to go back to the optimism with which we started, because Gautam told us the bottom has definitely been made for this market. Gautam, so what's the base case view? Nifty either December 25 or 12 months, whichever horizon you're looking at. What's the base case expectation? And leave us with, say, the top 3 bets or the top 3 segments through which you can play this leg of the recovery and the resumption of the bull market, if I can call it that.
So look, firstly, the Nifty should compare to 22,000 levels, not necessarily 23,000 levels. That's where the bottom was made. From that, Nifty should end up this year. Will it be double-digit returns, single-digit returns? Again, too premature. And that's why I used the word tactical in the beginning. Bottom made. Bull market is there or not is too early to say that. But sector picks, irrespective of what happens, at least in a relative way, definitely, is private banks, as Vishal highlighted. Consumption names selectively again, because there are enough catalysts around pay commission coming up next year and the tax break we saw this year. And finally, very selective names around the industrial basket.
All right. Gentlemen, thank you very much for joining us here on this special program. And we'll touch base post-April. I think that is when we will really know what comes our way and in terms of whether tariffs are big, they'll sustain for a long time, the roadmap ahead. But it's interesting, nevertheless. The message is clear, not thematic, not narratives, not sectors, but individual stocks within these sort of, spaces and sectors which will do well and perform in 25. So you've got to be very selective.